Hey everyone, hope you all are doing well. In today's video, we are going to dive deep into the changing dynamics of the paint industry and try to understand how the new entrants in this space are scaling up for a serious disruption. I was actually going through the transcripts of the leading players in the paint industry, and I can confirm that investors are definitely concerned about the emerging competition, especially because the new entrants have deep pockets, a strong distribution network, and a trustworthy brand. In the former part of this video, we'll look at the nuances of the paint industry, and in the later part, we'll try to understand why keeping an eye on the intensifying competition from the new entrants is important. At the end of this video, I'll also be sharing which company will I be parking my money in, but keep in mind that this video is not at all to give you any stock recommendations, but to help you garner the complete know-how of the paint industry so you can make informed investment decisions. In case you are new here, then do consider supporting this channel by smashing that subscribe button. So as of 2024, the market size of India's paints and coatings industry is estimated to be around $9.6 billion, and it is projected to grow at a CAGR of 9.38% to reach a market size of $15.04 billion by 2029. The paint industry consists of both organized and unorganized players. However, close to 70% of the market is commanded by the organized players. Also, within the organized paint industry, there is an oligopoly wherein players such as Asian Paints, Birla Paints, Kansai Nerolac, AkzoNobel and Indigo Paints command a market share of close to 90%. Within the paint industry, there are two segments, decorative paints and industrial coatings. Under the decorative paint segment, there are products such as interior paints, exterior paints, distemper, putty, wood coatings, cement paints, primers, and thinners. In terms of consumption, the decorative paint segment has a majority share of 70% of the organized market. The remaining 30% of the organized market is the industrial coating segment, which has products such as automotive and refinish coating, powder coating, protective coating, glass coating, pipe coating, and general industrial coating. As of now, the leading player in the decorative paint segment is the 80-year-old behemoth Asian Paints, and the leading player in the industrial coating segment is the 104-year-old Kansai Nerolac Paints, which is a subsidiary of Kansai Paints, Japan. Now, this industry has been consistently growing at 1.5 to 2 times India's GDP growth rate. If we look at the per capita consumption of paint in India, it is only 3.5 kgs, which is quite less when compared to developed countries where the average per capita consumption of paint is close to 15 kgs. This shows that there is a lot of room for the paint industry to grow from here. There are several factors that are expected to drive demand in this industry. These include rapid urbanization, affordable housing for all initiative under the PM Awas Yojana, increased infrastructure spending by the government, shorter repainting cycles, increased disposable incomes, rising rural market preference for quality paint products, and lastly, high growth rate of the automotive and the industrial sector. Among these factors, one factor that was a shocker for me was that the repainting market actually makes up for 70% of the decorative paints market. Surprising, right? A major reason for this can be attributed to the increase in the number of rental homes, which has reduced the average repainting cycle from 7 to 8 years in 2011 to 4 to 5 years in 2024. Now, there are certain factors that largely affect the sales and margins of these paint companies. Let's go through 4 of the most crucial ones. The first factor is the price of crude oil. The thing is that crude oil and its derivatives form approximately 50% of the cost of raw materials in the making of paint. This is why a sudden increase in crude oil prices due to macroeconomic factors such as Russia-Ukraine war have a major impact on the margins of these paint companies. The second factor is the price of titanium dioxide, which is a crucial raw material in the making of paint. It works as a pigment to impart color and opacity to the paint and forms approximately 25% of the paint in volume terms and 10% in raw material cost terms. At the moment, India is the largest importer of titanium dioxide in the world. The majority of it is imported from China. However, India is working towards reducing the dependence on China, and they are doing it by sourcing titanium dioxide from other nations such as US and Australia. The third factor is the foreign exchange rates. Since both crude oil and titanium dioxide are imported in the country, an increase in the foreign exchange rate increases the import costs for the paint companies, and so the margins get affected by the same. Last but not the least, the fourth factor is the vagaries of the monsoon. The monsoon period affects the sales of the paint companies in a unique way. If the monsoon periods are long, then the number of dry days in the festive period in the second half of the year share reduce. This then affects the demand for paints negatively. But if the monsoon periods are too short, then it affects the disposable income of the people in the rural market, and so the demand for paints from the rural markets reduce. So an optimum period of monsoon is essential to maintain balance between the number of dry days and the disposable income of the people in the rural markets. Now before we move on to how the existing players are faring and which new entrants are responsible for the intensified competition, I would also want you to know about 4 promising areas of opportunity that lie ahead for the paint industry players in the coming 4 to 5 years. The first one is nano paints. It is basically a type of paint that can alter surface properties by using nanotechnology enhancements. It can be used to improve the durability of the paint, build resistance to scratches, instill self-cleaning capabilities by making the paint hydrophobic, and even reduce energy bills by imparting thermal insulation properties in paint. The second area of opportunity is health-centric paints. In the premium segment of paints, which caters mostly to the urban areas as of now, the demand for health-centric paints has increased. For example, latex paints with zero volatile organic compounds help reduce indoor pollution by eliminating the emission of harmful chemicals in the indoor environment. At the same time, health-centric paints also have antimicrobial and odor eliminating technology, which helps to prevent the growth of molds and mildew and reduce common household odors. The third area of opportunity is aerospace coatings. With the rise in air travel and defense spending, there is a growing demand for commercial and military aircrafts. This drives the need for specialized aerospace coatings that can withstand extreme conditions, reduce the drag, improve fuel efficiency, and offer superior corrosion prevention. The fourth area of opportunity is powder coatings. These have use cases in the automotive space, appliances, architecture, and the furniture space. The benefit of powder coating is that they are solvent-free, and so there are minimal VOC emissions, making them environment-friendly. At the same time, they also provide a durable finish that is resistant to chipping, scratching, or fading. So now that you have a good idea about the nuances of the paint industry, it's time that we delve a little deeper to understand how the existing players are faring and why the intensifying competition from the new entrants should not be taken lightly. Let's start off by looking at the revenue of the top 5 firms, which represent approximately 90% of the organized market. It is evident that in the latest financial year, only Indigo Paints has been able to grow its revenue by more than 10%. The growth rate for all the other 4 companies has fallen in FY24 when compared to the growth rate in FY23. The fear of competition from the new entrants has already started to reflect in the share prices of the existing players. We can see that the share price of Asian Paints has remained flat since 2021, even though the revenue has increased from 21,700 crores to 35,490 crores. In the case of the second largest player, which is Birla Paints, it is trading even below 2021 levels despite the revenue increasing from 6,800 crores to 11,200 crores. Likewise, when we look at Kansai Nerolac, it is trading way below 2021 levels. Now in the case of Kansai Nerolac, one of the additional reasons for the fall in the share price is that all the other companies derive a major portion of the revenues from the decorative paint segment, wherein they have control over the prices. Kansai Nerolac, on the other hand, derives a significant portion of its revenue from industrial coating segment, wherein the control over the prices is minimal because of the B2B customer base. Due to this reason, if the raw material cost increase, the same cannot be passed on to the customers proportionately. Likewise, the shares of Indigo Paints has also fallen. Now for AkzoNobel, the company's share price has gone up. But if you were to see the P ratio of the company, then it has fallen from 62.5 in 2021 to 30.4 in 2024. This again shows that investor sentiment for AkzoNobel is not as strong as it was in 2021. On the date of making this video, Asian Paints is trading at a stock price of 2,900 rupees. For any good company which would have great growth prospects in the coming years, the target price posted by institutional investors will always be greater than the existing share price. But what has happened is really surprising. Firms like CLSA have revised the target price for Asian Paints to Rs 2,425 from the earlier target price of 3,215. And even Goldman Sachs has revised the target price to 2,825 from the earlier target of 3,300. The reason given by them is simply the increase in the competitiveness in the space. Well, they're not wrong also. If one looks at the new entrants and their plans, it becomes very clear that in the coming years, there is going to be intense competition for the market share by the industry players. Not only will there be a short-term price war, but the margins would also shrink as the market leaders will have to increase their marketing and advertisement spend to maintain their market share. Abhijit Roy, the MD and CEO of Birla Paints, quotes that the competition is serious but much impact hasn't been seen in the market share as of now. In my opinion, it is only a matter of 1 to 2 years for the dynamics of the paint industry to change drastically. To end your curiosity, let's get to the most important part of this video and take a look at who the new entrants are and what are their plans to make a dent in this space. The first player that has made the most noise is Grasim Industries, which is the flagship company of the Aditya Birla Group. Grasim has launched its paints business under the brand name Birla Opus Paints. They have inaugurated 3 Birla Opus plants in Panipat, Ludhiana and Cheyyar. By the end of first year of operations, Birla Opus Paints plans to establish its presence in each and every town that has a population of 50,000 and above. The plan of Grasim is to grow at a blistering pace, but the question is how? Well, as far as the production capacity is concerned, Grasim has got it covered. They are doing a whopping 10,000 crore capex investment to build a paint manufacturing capacity that will be more than the current total capacity of the second, third and fourth leading paint player. For distribution, Birla is already present in most paint shops because of being a leader in the putty segment. If the same distributors start selling paint as well, then the company will be able to utilize the existing distribution network to sell its paint. Moving on, the second player that has recently entered the paint industry is JSW Group. They launched their paints business in 2019 by the name of JSW Paints, and in FY24, they have already crossed the 2000 crore revenue mark, which is already more than the previously 5th largest player, Indigo Paints. They have attained break-even at the operating level and are now targeting to reach a revenue of 5,000 crores and an operating margin of 15 to 18% by FY26. Currently, 60% of their business is coming from the decorative paint segment and the remaining is coming from the industrial coating segment. At the moment, the company has 2 manufacturing plants, one in Vijayanagar for decorative paints and one in Vasind for industrial coatings. Both these plants cumulatively have a production capacity of 210,000 kiloliters. With respect to the sales channels, the company's presence is high in South India and it now plans to focus on North India as well. The third player that has announced its entry in the paints industry is Astral Limited. They have forayed into the paints business with the brand name Astral Paints. In 2022, they had acquired 51% stake in Gem Paints Bangalore for a sum of 194 crores, and this year they have strategically launched the first phase of their paints manufacturing unit to cater to the Karnataka and Gujarat region. Mr. Soumya Engineer, the CEO of Astral Adhesives and Paints, stated that they will strategically and incrementally introduce their products in different markets with the aim to cover the entire country by FY27. Last but not the least, the fourth player that has forayed into the paints business is Pidilite Industries Limited. The company has ventured into the decorative paint segment with a silent launch of its new brand, Haisha Paints. Pidilite, which is renowned for their leadership in the adhesives and home improvement sector, can utilize their extensive distribution network in hardware stores to sell their paints. For now, they've launched their products in smaller towns in Andhra Pradesh, Telangana and Orissa. The management plans to wait for 6 months to see the response from the market and thereafter work on scaling plans. So there you have it. The paint industry is on the brink of a major shakeup with heavyweights like Grasim Industries, JSW Group, Astral Limited and Pidilite Industries stepping into the ring. These new entrants are not just making noise, but they are coming with deep pockets, cutting-edge technology and strategic distribution networks ready to challenge the long-standing dominance of the current market leaders. In the short term, we might see price wars and pressure on margins, but in the long term, this competition could drive innovation and better choice for consumers. Companies like Asian Paints, which have long enjoyed a comfortable lead thanks to their advanced tinting technology and a strong brand presence, will now have to up their game to stay ahead. For investors, this changing landscape presents both risks and opportunities. Personally, I am bullish on Grasim Industries. Their aggressive expansion plans, coupled with the trust associated with the Birla brand, make them a formidable contender in this space. But remember that this is not at all an investment advice. I would recommend you to do your own research before making any investment decision. Hope this video gave you valuable insights and you were able to learn something new today. Thank you so much for watching. Like the video, hit that subscribe button and stay tuned for my next video.